We're back. What's going on, everyone? And welcome back to the Modern Day Trader channel. This is weekly review number 6, and we're just going to jump straight into it. This was an eventful week. 2 trades taken this week, but the maximum drawdown that I've achieved in a single week, I think even in a single month. And not because of overtrading, not because of over leveraging, but because of slippage. Something I know a lot of traders have faced. If you haven't, let me take you through it. Basically, what had happened was I took 2 positions on Wednesday ahead of US inflation data later in the afternoon, and one position, Euro USD, was at break even. Position GBP JPY short, which I had taken a couple of hours after this Euro USD long, was still floating with my full risk exposed. And I like to, if I'm going to take a trade on both those positions, I think I had mentioned this in the weekly live, if any of you have seen it. If you haven't, check it out. If not, Euro USD and Pound JPY are positively correlated, which basically means that 90% of the time they'll be trading in the same direction. And so if I will be taking a position on both of these pairs at the same time, I would prefer to be in opposing position. So I'd prefer to either be long Euro USD like I was here, and short Pound JPY, which I was at the time, because then at least the positions I'm taking act as a hedge to my overall, acts as a hedge to one another at least, because in the event that the market moves with a lot of momentum or moves very impulsively, like we do during news announcements, then if I'm taking the same position on both, long on both, then whether I'm right or wrong, right, for example, okay, I'll be right on both pairs and I'll profit on both positions. But if I'm wrong, it means I'm wrong on both positions. So the hedge at least neutralizes some of those losses. And because more often than not, I'm not trading 1:1, I trade a minimum of about 1:2. But on both these positions was a 1:4 on Euro USD and 1:5 on Pound JPY. That would have not even balanced out the losses, but I would have walked away with profit had things gone to plan, which they didn't. And so I was down about 4.44% for the day, which is 4.44R for the day, which is about 1.1%. For the day, which triggered my maximum daily drawdown, which meant I didn't take any positions after that. And to be honest, I didn't take any other positions for the week. This is because I reached my 20 trade, not the limit, but my 20 trade sort of point, which is where I then evaluate the first 20 trades, or in this starter set, the first 20 trades for the year, and look for tweaks, modifications, lessons that I will then apply into the next 20 trades. So it was a bit of an eventful week. Let me take you through the 2 trades as I saw them first, and then I'll take you through, in hindsight, what I kind of learned from the 2 positions and what I maybe would have done differently. So starting with Euro USD, it was a 2-hour POI. If we start on the daily, what I'd seen on the daily, or what I was looking for, was that price had shifted structure, indicated by the green dots signaling an uptrend, and then the break of structure here. And then I was seeing this move up here as a correction before we continued lower. And you can see we ultimately did get the continuation lower, but I was looking at price gravitating towards this region here before we got that push to the downside. This sort of just playing into how I mark out my POIs. And after seeing this break of structure here, I was looking at this area for price to trade into before we got that push lower. So that's what I was seeing from a high time frame perspective, which meant my bias was bullish for the week, dropping down into the 4 hour. We had from the previous week, obviously broken impulsively out of this level. Saw this as a correction, and then we continued higher. Admittedly, the continuation or the break above was not with any good momentum, but I mean, nonetheless, I marked out this area as my POI and was bullish on price. But I was looking to take this from the 2 hour just because I didn't see price getting that low before we started to trade higher. And what gave me confidence in the 2 hour was just seeing these multiple wick rejections from this POI here and dropping down into my entry time frame, which was the 5 minute. You can see 5 minute time frame. We consolidated for most of the agent session, which I generally like to see before taking a position in London. And then we had this push lower, which then produced this entry schematic that I look for on these micro timeframes, push higher, mitigation of that, which triggered me in, and then we move. So this met the plan through and through. We started trading higher, not great momentum as we traded higher, but we did reach 1%. I moved to break even. And then this was the candlestick that formed at that CPI announcement. So this trade closed out for negative 3.21R, which is a minus 0.8%. And some of you, if you don't know how slippage works, are asking, but bro, the stop loss is at break even. How did price, stop you off for a loss essentially? And this normally happens when there is a lot of volume that enters the market and we get these crazy impulsive moves like this. Your broker essentially can't fill your order at the price that you've set it at. And because of the high momentum move, they essentially fill your order at the first possible price that, they can, given how quickly the market's moving. And just to zoom back out to the 2 hour, I'm going to show you guys where my order actually was filled, just so that you can see what I had to deal with. So that was essentially where my broker filled my order for my stop. And instead of closing this position out for a small win, because I have to add a bit of room to my break-even stop point, just to account for trading costs and commissions. I ended up taking what was effectively a 3R stop, which, frustrating, but in the moment I understood why. And in hindsight, when I looked at this position, starting from the daily, my bias, I think, from the high time frame was just a bit off, and I placed a bit too much focus on what I was seeing on those 2 hour time frames and did not pay attention to what was actually going on these daily time frames. So we had this rejection from the 26th of March. Last week, we tested this area, failed to break above, closed with a very clean sort of doji or rejection wick. We tried to then break or test this level again, and then Tuesday, we formed the same sort of candlestick formation. So we effectively had tested this area 3 times or tried to break above this area for 3 days, obviously not consecutively, and failed. And that should have been a clear sign, at least the first clear sign that, look, we may not be hitting higher just yet. And then coming to the 4 hour, this was the second sign that, I just completely missed. So obviously, this is obviously a high value area on the 4 hour. That price came up into, we pushed lower, and then pushing back up into that area. We did close above, But then what happened next is what I actually should have been paying attention to was a full retrace of that high momentum break above with similar momentum that closed below the open of this push to the upside. And then we had this corrective move here, just a clear sign or telltale signs that we're going to continue lower to the downside. So again, the high time frame was clearly showing me that price is looking to push lower. And yeah, I was just very focused on, these two seemingly irrelevant wicks that we had on the 2 hour. And while it was, fine that I managed to get to break even, I ended up taking a loss just because of that volume that came in with CPIs. So that was the first position. Second position on pound JPY is the short here. So this was a 30-minute POI, but again, let me start on the daily. This one was slightly different to Euro USD. What we can see on the daily is, so at the time, obviously this hadn't formed, but we had this daily candle to the upside, or maybe rather mostly at the daily trend, we're bullish on this pair. Bullish and seeing price trade lower towards these high value areas before we continue to the upside. So definitely trading a corrective move, and I was looking for price to head lower. On the 4 hour, nothing much here, to be honest, that was convincing me. I wasn't really looking at the 4 hour. I think from a 4 hour perspective, the only thing that supported the move was we had this POI here, which was that origination point of the push to the upside. We had never mitigated it, and I was looking for price to at least come down into this level and then continue high as a first point of interest. Obviously, preferably looking for that daily level to be achieved before we moved higher. And then jumping down to the actual POI time frame, which was the 30-minute, you can see it was the first shift of structure, which, as I mentioned in the previous video, I normally don't like taking, but the schematic was very clean, and I waited for a bit of extra confirmation in this POI before taking it. So my entry was on the 15-minute. Waited for multiple rejection candlesticks, got 1, 2, 3, 4 before looking at entering on this candlestick. But before doing that, had to obviously check that there was confirmation on those lower time frames, which there was. We got the run of liquidity in this area here, and then break of structure there. So tick that box. We've got the confirmation or that low time frame confluence, and then just did a market order at that level. And yeah, this was much closer to CPI, I think about an hour before. Initially some good movement. As you guys can see, it didn't hit my stop loss. It didn't reach the level at which, my stop loss is placed. But what tends to happen at these high impact news events, or around the time of these high impact news events, is that the spread begins to widen quite a bit. And so I fell victim to that. Just taking a look at this again, where price actually took me out, where it broke full my order was just above where my loss was. So even though we didn't reach that price on my MetaTrader, that's the price I was taken out of the market. And that happens when the spread is really wide. And so correct bias here, I think slightly different to your USD, because the bias was right. It's just that, I didn't have a wide enough stop. And arguably, I gave it enough room to breathe, but in hindsight, perhaps should have given it a little more, knowing that I was trading this ahead of a very high impact news event. But to be honest, I'm not sure, I can't say for sure that if I'd placed it there with a 20 pip stop, the same thing wouldn't have happened, because I don't know how wide that spread got in that time. So this was just the price at which my order was full. But look, the spread could have been as wide as, that point up there. So can't really beat myself up for that. But again, like your USD, frustrating that in an ideal scenario, I would have walked away with break even on Euro USD and then 1:5 on this position, which is a 1.25% on the quarter risk position that I'd taken. So slightly frustrating in that sense. And so, yeah, those are the two positions I took, and maybe just looking at my total positions for the I guess first data set. This is how we're looking at the end of the first 20. Not great, minus 4.11 R. But that being said, I must consider the anomalies. This trade is an anomaly. It shouldn't have happened. It did, but when I'm looking over my results and looking for certain patterns or characteristics of my results, I will take this into account as a loss, but I am very conscious that this is not something that happens with the majority of my peers. So I can't put too much weight on this one loss and try to dig into it extensively. Obviously, it did happen. I need to take note of that, but yeah, it's not something that I think is weighing very, very heavily on me. So yeah, fairly impulsive, fairly corrective, just in terms of my sequence of results up till this point. And hey, we had a bit of a breakout to the downside. So yeah, minus 4.11 R on all those positions gives me it's about 1.02% in terms of the return, the actual return. FTMO currently have a maintenance going on their website, so I can't show that. But just looking at my balance on my actual account, I'm sitting at $9,625.51. That is a start to date return on that funded challenge of minus 3.74%. So not terrible, not very terrible. And guys, I think just looking in hindsight, and it just something that's coming to me is a video I saw a podcast I listened to by Alex Hormozy called The Game. One of the episodes this week is that bad things will happen to you, unfortunate things will happen to you, and very valid things will happen to you that are bad, that you can acknowledge and verify that, look, this was a terrible thing that happened. What happened in the market this week, I acted correctly. I did what I was supposed to do. I protected my risk management was perfect. I managed the plan, to plan. I managed the plan accordingly, but things didn't work out the way they were supposed to because of high impact news event, all of that. Arguably, those kinds of things happen. But looking back on the week, my frustration is validated. What I'm basically trying to say, and that's what he said in this podcast. He said things will happen to any entrepreneur, business person that are very validating, and if they had to give up at that point or had to let that sort of get them down or whatever, people would be okay with that and be like, yo, but yeah, XYZ happens to so and so, so it's understandable. And so he was saying, regardless, you still decide at the end of the day how or what story you tell yourself about any outcome. And I think that's just like ringing very true at this point, is that this is validated, but I'm not going to let what happened sort of get me down and make me upset and frustrated. I'm not going to kick myself because this happened to me, and it's so unfair and all of that, because I would be right if I said that, to be honest. But then what? Honestly, but then what? I need to decide in this moment, and I did, which is, I think, a really cool sort of like takeaway from this week. Was I decided what story I told myself about these trades that played out. I could have stopped at the market did this anomaly, whatever, let's move on to the next. But there are very big tweaks that I'm getting out of, these two positions, and tweaks that I think came at the right time, because I'm at this 20 set, end of this 20 set, and tweaks that I feel going into the next 20 trades are going to impact my results quite massively. Things that I'm still testing, things that I'm still researching, but all going back to the depth or the extra level of depth that I'm looking to go into in my trading plan. And so I'm very keen for you guys to see some of that. It relates to the quarterly theory, which I think some of you guys have heard about, but it's all just about timing and how the market essentially flows through the weeks, through the months, through the quarter, through the year, through the daily trading sessions. And yeah, they do say things sometimes tend to get a little bit harder, a little worse just before they get better. And I think we may have that may be the case this time, because looking at this equity curve, it's not looking very great at the moment. But I don't know about you, but I'm seeing a bit of a manipulation before distribution to the upside. We don't know. I guess whatever work I put in going forward will determine that. It's either we continue to the downside or we reverse to the upside, and whatever happens is up to me. But that being said, very, very keen for some of the things that I'm working on, some of the things Marcy's also working on, and how we are going to implement those things into our charts. And so thanks for another weekly review, another slightly long one, but two important trades to go through. If you haven't checked out Marcy's weekly review, be sure to do so. Be sure to leave this video a like, subscribe, and comment down below what your biggest takeaway was from this video. I'm very keen to hear from you guys. And don't forget, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.